A lower than expected inflation reading raises hopes of no more interest rate hikes. The federal government backs down on caps on gas prices, and the latest moon landing ends in a crash. It's Thursday, the 27th of April, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you're speaking with one of our favourite economists, Gareth Aird, Head of Australian Economics at the Commonwealth Bank.
Yes, all about yesterday's inflation print, what it means for interest rates. Also, we have a good chat about what's happening in the Australian economy. And really, the news is pretty good, as Gareth puts it. You know, if you look at the unemployment rate, which is a pretty good litmus test for any economy, 3.5%, pretty good. It's a great chat if you're into economics.
Yeah, it's coming up a little bit later on, Sean, and that is the main story this morning. There is a growing view that the Reserve Bank will keep interest rates on hold next week after those inflation figures released yesterday came in slightly lower than expected.
The Consumer Price Index for the March quarter came in at 1.4% and 7% annually. Now, the numbers were below forecasts, and the quarterly figure was the lowest since the December quarter back in 2021. Undoubtedly, we are now past the peak of inflation. That's good news. Though how quickly price rises come down is still up for debate. The trimmed mean rate, which takes out a bunch of volatile items and is pretty much the one the Reserve Bank cares about most, came in at 1.2% for the quarter and 6.6% for the year. Again, these were better numbers than expected. Treasurer Jim Chalmers yesterday said the figures show that the worst of inflation is now behind us, though they will hang around for longer than people want, and price rises remain unacceptably high.
Sean, I know I've asked you this before, but I'm going to do it again. When you say that the trimmed mean rate takes out a bunch of volatile items, what is considered volatile?
There are a bunch of things. Food is often considered volatile. Energy prices are considered volatile. It's things that basically depend a lot on weather, and I mean, everything depends on weather and supply and demand and that sort of thing, but these are just the particularly volatile ones. Food and energy are good examples.
Okay, so where are the price increases still prevalent?
Well, economists like to split things into goods and services when it comes to inflation. The pace of goods price hikes has slowed appreciably. For example, clothing and footwear prices actually fell during the March quarter. That's pretty much because of sales that went on. So too household furnishings and petrol prices. But food prices were still rising too fast. On the services side, inflation remains much too high, 1.7% for the March quarter. Rents are a big contributing factor to that, and of course they're tipped to keep rising. Energy prices, the cost of health services, childcare, those sorts of things are still jumping in price. Interestingly, during the quarter, domestic travel prices rose by nearly 5%, but international travel prices fell almost 9%.
The big question, Sean, is really what does it mean for interest rates? What's it mean for the Reserve Bank Board's deliberations next Tuesday?
Well, while the number was lower than forecast, in fact, the numbers were lower than forecast, they weren't a lot lower. So it will be a close run thing. Certainly, yesterday's Bureau of Statistics inflation data adds to the case for not lifting rates next week. And the consensus among economists, if there is one, is for another pause in May. In bond markets, yield dipped yesterday following the release of the CPI data. Bond investors have now priced in a 25% chance of a 25 basis point hike in rates next week. Obviously, that means there's a 75% chance that nothing will happen. So the smart money at this point is on no rate rise next week, Michael.
All right. How did local markets respond to the news yesterday?
Well, it was trading lower ahead of the inflation data, but it climbed back up again when the prospect of no more rate hikes emerged. The S&P ASX 200 finished the day down just 5 points to 7,316 points. The worst performing sub-index was utilities and the best were energy and industrials. Not a huge amount of action among the large caps. Rio closed down more than 1%, while Brambles, Transurban and Woodside all outperformed. The gold stocks were among the best on the day. Market leader Newcrest closed up 1.7%. Bit of corporate activity going on. Online retailer Kogan.com announced a third quarter of positive earnings. It intends to undertake an on-market share buyback of up to 10%. Its share price at one point yesterday was up more than 10%. Sonic Healthcare has done a deal to buy Medical Laboratories Dusseldorf for around $300 million. It's a pathology operation in Germany. Meal delivery service Marley Spoon is set to be bought out by a German-listed company. That's according to media reports that sent its faltering share price up 14% yesterday.
And just quickly, Sean, what's happening on international markets?
The Aussie dollar fell towards 66 US cents on the back of the inflation data. In the short term, exchange rates shift in response to interest rate expectations. If a global investor thinks they're going to get a higher rate of return somewhere outside Australia, then they're going to shift their money to that, and that puts downward pressure on the currency. Otherwise, Michael, commodities were generally higher, as were cryptocurrencies.
All right, we'll be back in a moment with the rest of the day's business news. Sean, the federal government has backed down somewhat on its $12 per gigajoule price cap for gas producers supplying the East Coast market.
The government said yesterday, Michael, it will extend without an end date the price cap which was introduced late last year. But it will also allow for exemptions if producers satisfy the ACCC that they will deliver gas to the domestic market. Now, small producers will also be exempt from the $12 price cap if they supply the domestic market. While the intent of the policy was welcomed by the industry, it really doesn't help in terms of providing policy certainty for gas production. The government stepped in last December to try and cap energy costs. The producers said under those caps, it wasn't worth investing as much in the sector. That will lead to supply problems, of course. And now the government's saying, if you help the local market, we'll help you. All a bit confusing, really.
I'm glad you said that, because I was listening going, yeah, this feels like it's going all over the place.
Yeah, that's the whole problem for the gas sector at the moment. The gas caps are supposed to help consumers, that's fair enough. But, big investors and big producers saying, well, if we're limited to what we can charge, then that also limits what we're going to invest, which of course makes sense.
Yeah, and as you've told us many times, Sean, the one thing that business hates most of all is uncertainty.
That's right. Exactly.
Now, with the federal budget due in just 12 days' time, which feels like it's come around very, very quickly, Sean.
It does, yeah.
Treasurer Jim Chalmers says that his challenge is to provide responsible cost of living relief without further driving inflation.
As Chalmers put it, he wants to land the budget. How do you land a budget?
And where do you land it? How big a runway does it need? Is it like a drone?
Yeah, well, I don't know.
See, this is why we need to, we need to get Jim Chalmers on and put these questions to him.
Yeah, how do you land a budget? Anyway, he said it will be about responsible cost of living relief, playing the foundations for the future growth in our economy and making sure that the country is more resilient to global economic shocks. His comments came amid some disquiet among Labor backbenchers who want the job seeker rate to be increased. When asked about it, Chalmers said his job was to weigh up competing demands and do the responsible thing. He also commented on the changes to gas price caps, saying it would take the sting out of energy price rises. Of course, Michael, over the next couple of weeks, we'll get all sorts of budget announcements and leaks. There was one yesterday. The government plans to allow people to buy 2 months' worth of subsidised medicines on a single prescription rather than needing 2 separate prescriptions. It means about 6 million Australians will pay less for their medicines, according to the government.
Yeah, when those stories start to appear, that is a sure sign that the budget is just around the corner.
Exactly.
Now, Greens leader Adam Bandt was at the press club yesterday, Sean, and he called on the government to phase out negative gearing and abolish the 50% capital gains tax deduction.
Otherwise, it risks worsening the housing crisis, Bandt said. He warned that the Greens would be the party of renters and the party of stressed mortgage holders if things don't improve in the housing market. Bandt will put forward proposals that prioritise renters and encourage more public and affordable housing. Now, the Greens aren't supporting Labor's $10 billion Housing Australian Future Fund, something the Prime Minister was very critical of yesterday. Bandt basically says the package needs to be much, much bigger.
Now, big news, Sean, for political star spotters, because Sydney is going to host the 2023 Quad Leaders meeting with the leaders of the US, Japan, India and Australia. That's exciting.
It's very exciting, and the meeting will be held at the Sydney Opera House, which Prime Minister Anthony Albanese called Australia's most recognisable building. Now, Michael, I went to a wedding at the Opera House recently. I've been to the opera there, performances, the ballet, orchestra. Never a business meeting though. Never. It just seems like a waste of a great building, really.
Where would you hold it then, Sean? If you're not going to hold it in our most iconic building, where are you going to hold? I suppose Parliament House.
Parliament House, there's office towers everywhere. But There's not like there's big meeting rooms in the Sydney Opera House. Well, I don't think there is.
They should have it on stage. Sell the tickets. That might fill the budget black hole.
Yes.
Have they thought about this? Extra revenue streams, $50 a head. They could get, I don't know, 10 grand or something to go towards that $50 billion.
Yeah, $5,000. I mean, don't hold back. You got Joe Biden. He's running again. We know that. Very exciting.
Think about how much people paid to see Barack Obama when he was in Australia recently. The tickets were around $800, I think.
Oh, really?
For those ones. And he's not even the current president.
No.
Surely the current president, and inflation, obviously, as well.
$2,000. Anyway.
Minimum.
Yep. Prime Minister Albanese said the meeting with Joe Biden, Fumio Kishida and Narendra Modi is an opportunity to showcase Sydney and the Australian nation.
And the Opera House.
In the Opera House. Indeed it is.
Now, poker machine reform has been a hot topic across the country over the past year, Sean, but particularly in New South Wales. And new figures show the state's gamers have lost $4.3 billion to the state's 86,000 poker machines in just 6 months. That is just staggering.
It is really hard to get your head around that number. Now, the new New South Wales Labor government won the election, notwithstanding it took a much slacker line on poker machine reform. The latest official data shows statewide losses in pubs and clubs from June to November last year was $4.26 billion. Now, that generated about $1.2 billion in tax revenue for the government. New South Wales is home to about half of Australia's poker machines. A New South Wales Crime Commission report last year found the machines were one of the last safe havens for criminals by allowing them to use large amounts of cash, effectively washing that cash through the machines.
Sean, one of the country's biggest lithium producers, Mineral Resources, has been hit by delays at its key Mount Marion project, triggering a 10% slump in its share price.
Mineral Resources also cut full-year production guidance for its core mining services division as contracts dry up, with new projects still in the approval stage. Mineral Resources said work to double processing plant capacity at Mount Marion to 900,000 tonnes a year had been hit by problems getting workers to the site and then finding them somewhere to sleep. Now, Mount Marion is about 600 kilometres east of Perth. It's in the middle of nowhere. There are also competing projects around the place. They all want workers. Anyway, finding the workers and somewhere for them to put their head down at night, a little bit tough.
And Sean, this is an interesting one. One of the faster growing brands, car brands in Australia is BYD, the Chinese electric vehicle manufacturer. What on earth does BYD stand for? I've been trying to figure that out.
You got one guess.
Bring your dinner? I don't know. And you could use it. You could use it for food delivery. It could be like an Uber Eats vehicle. In the bring your dinner, BYD.
Alternatively, build your dreams.
Well, that's an option as well.
That is the option. That is
okay.
what it's short for.
All right,
anyway,
please go on.
Eagers Automotive, which is the country's biggest car dealership, expects considerable momentum in the sales of electric vehicles this year as Australia catches up to other markets where the adoption of EVs is happening much faster. According to a story in the Financial Review, Eagers has the exclusive retail distribution rights in Australia for BYD, build your dreams, bring your own dinner, whatever. It is now the second biggest selling EV manufacturer in Australia behind Tesla. In fact, BYD has just overtaken Volkswagen as the biggest selling car brand in China. It's doing incredibly well. In Australia, it's done well on the back of prices. Its Atto 3 model sells for between $48,000 and $51,000. Now, Eagers Chief Executive Keith Thornton said there was a generational shift underway as Australian customers are becoming increasingly attracted to electric vehicles or hybrids. Market adoption of low and zero emission vehicles is accelerating rapidly, as he put it, via organic changes in consumer preferences supported by incentives and government mandates. There you go.
There you go, indeed. International news time, Sean, and there were a couple of big tech stocks reporting earnings yesterday. Microsoft and Alphabet, which is, of course, the parent of Google, impressed investors.
Very resilient, I'd say. Microsoft's third quarter profit and sales beat expectations, helped by strong corporate demand for its cloud computing software and services. Shares jumped more than 5% in late trading. In the group's Azure cloud computing business, revenue rose by more than 30%. Alphabet also reported their first quarter results. They exceeded analysts' estimates, demonstrating that its search advertising business is so far weathering the economic downturn and increased competitive threats. Google continues to fare better than its rivals as economic pressures force advertisers to cut spending. Search advertising has been generally more immune to swings in the economy than spending on social media, where other players, Meta Platforms, parent of Facebook, and Snap have experienced more dramatic declines in demand. Alphabet's share price rose nearly 6% yesterday.
Sean, I mentioned this one at the top of the show. Tokyo-based iSpace Inc. said it lost contact with a lander bound for the moon and that the craft, which didn't have anyone on board, probably crashed.
iSpace's Hakuto R Mission 1 lander was scheduled to touch down yesterday morning in what would have been among the very first commercial successes to place a lander on the moon, but communication was lost shortly after engineers confirmed the lander was in a vertical position on the final approach. In a statement, iSpace said, and I quote, "It has been determined that there is a high probability that the lander eventually made a hard landing on the moon surface." It's quite the understatement, Michael.
It is, and it's quite reminiscent of Elon Musk or the SpaceX statement last week after their, I think they call it the Starship, after that explosion, which was described somewhat colourfully as a rapid, unscheduled disassembly, which is a very fancy name for an explosion.
A RUD.
A RUD. Ooh, I don't know whether Kevin Rudd would appreciate being a spaceship explosion being classed now as a RUD. That's quite a good term, though. Finally, Sean, you mentioned this very briefly, just in passing before, and it did happen 24 hours ago, but it is worth revisiting. Joe Biden has announced he will seek a second term in the White House in what could be a rematch against Donald Trump.
Now, if that's the case, the two contenders will have a combined age of 160 years. Anyway.
It's just such an unusual thing to do, to add their ages together in order to illustrate that point just then, Sean.
Yeah, they have many years of experience, both of them. Now, of course, Trump still has to get his party's nomination, but Joe Biden will be the Democrat nominee. He posted a video to social media saying now is not the time to be complacent, and that's why he's running for re-election. He does have opponents within the Democratic Party for the nomination. One is Marianne Williamson, who's a self-help author, and the other we mentioned last week, Robert F. Kennedy Jr., an environmental lawyer, scion of the Kennedy family, and a prominent anti-vacciner, though it's very difficult to see any circumstance where Joe Biden wouldn't get the nomination. He's still likely to face an uphill battle in the general election, though, against any Republican opponent. The electorate is very sharply divided, and Biden's battled persistently low approval ratings for most of his presidency.
Sharply divided, it seems to be a fairly kind of natural state for the US these days, isn't it?
It does, doesn't it? It's a funny country at the moment.
Indeed. All right, up next is the Fear and Greed Daily Interview. And Sean, today you're speaking with Gareth Aird, Head of Australian Economics at the Commonwealth Bank.
Yes, all about the inflation figures out yesterday, what he thinks is going on in the local economy. Great chat.
Yes, indeed. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 27th of April, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, Twitter, and Facebook. And stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. You can grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.